Welcome back to Policy Watch. Industry has largely welcomed the Reserve Bank of India's move to cut interest rates by 25 basis points or a quarter point to 6.25%. Now, the feeling is that the move is growth oriented and comes at the right time, particularly given that this is the busy season and demand for bank credit is expected to go up. Now, the question we are asking is, will this be the move that will spur industry or will it look for further cuts? And are there accompanying policy triggers industry is looking for? To discuss this, I am joined by Deepak Premnarayen, President of the Indian Merchants Chamber, and Manoj Paliwal, Chief Financial Officer of Omkar Realtors, a Mumbai headquartered real estate company. Thank you both for joining me. Mr. Premnarayen, let me begin with you. What's your sense? I mean, there seems to be generally a warm welcome for the interest rate reduction. Were you expecting more? Should something else have been done?
No, I'm happy with the interest rate in the sense the cut. One can always say it should have been a little more, but there are other things in the ecosystem that are happening. And the main thing is that even with the earlier cut, the banks, the cuts were not being passed through. So that was one. The reasons for that were manifold. Even with this cut, I'm not sure how much will be passed through. Effectively, the main issue with business today is cost of money. And there are other instruments through which this is happening. This is happening through, let's say, masala bonds recently, it's happening through corporate bonds. But I think we need to take more aggressive steps. We need to take steps in terms of, let's say, capital account convertibility. Bottom line is we need to get inexpensive money which is sticky. And at today's interest rates, even if the cut was, let's say, 0.5%, what would happen is that we would not be competitive globally. For me to be competitive globally, let's say IMC, we have almost a reach of 2.5 lakh members, 85% are SME, MSMEs, and the biggest bone of contention is the cost of money. Now, if they are borrowing anything from, let's say, 12 to 20%, they can't be competitive. GST, for that matter, is a great thing that's happening. If it happens at 18%, effectively it will give us a benefit of about 10%, because currently it's 25 to 30% is the rate. So let's say the average is about 27.5, 28%. It will make us more competitive globally because cost of money.
Right. So anyway, so you're saying that competitiveness is a key point, and this move does not completely address that challenge, even if it.
But at the same time, if I might add that the GST reform that is happening globally, that's being looked upon very positively. So what's going to happen is that more sticky money will come, inexpensive money will come, but there are other platforms through which we need to work very aggressively to get inexpensive money.
Right, and we'll talk about that and what can be done from a policy point of view. So Manoj, tell us about how it looks from a real estate sector point of view. First of all, how is the sector doing broadly at this point of time? What kind of demand patterns are you seeing, or supply patterns that you're seeing, maybe in a large city like Mumbai? And then how does this interest rate cut help to the extent that it does?
In Mumbai, if the ticket size is correct as compared to the customer demand, then there is no problem for the demand. And second,
even at this point of time, things have been steady on that front.
We have experience in our few projects, like we launched a project namely Meridia near BKC, and another project namely Ananta at Goregaon. There is very good demand for both of the projects.
Okay. So you're saying the interest rate or rate is not an issue then?
No, I'll not say that. Interest rates, due to higher interest rates, the affordability get reduced. Rates like 9.5 or 10% are very high as compared to the income we have in this country. So the ideal rate for a home loan buyer should be around 7 or 7.5%.
Okay. But that rate we saw almost a decade ago.
That will give a quantum jump in the eligibility of the people. Like if a person can't afford something today, after the cut in the rates, he'll be in a position to afford the same thing. There'll be benefit of 20-30% at least.
Right. So what about the transmission that Mr. Premnarayen also talked about?
Transmission from?
As in terms of, every time the Reserve Bank cuts rates, how much do banks actually pass on?
Usually we don't see much of the, pass on. But you can see liquidity improves. Now more banks are changing, even the developers. And of course, home loan market is very, very competitive. Almost everybody who wish to buy a house is getting the home loan. Service quality is very good. That way supply is better, far better.
So how would you define the market then? Is it stable and looking strong? Is it growing very fast? From your perspective.
Yeah, from our perspective, I'll say the market is stable and going bit strong.
Okay. And you're saying an interest rate cut would obviously help you go along?
It will definitely help us. definitely help us. Yes.
Right. Okay. We'll come to what else could help
Right.
the real estate sector in general and in specific. So let me come back to you. You talked about the other enabling factors that we need to get things going. So GST being one of them. What else is let's say the concern of the many members that you talked about?
If I might also go on that, but if I might use his shoulder.
Sure.
The point that was made is that there's been a shrinkage of almost 9.5+% over the last 2 years for loans that have been given out to MSME sector. It's the corporate sector, which is the large houses, its shrinkage is 2%. But so what does that reflect? So therefore there is a shrinkage in terms of credit. And why is that happening? There are high NPAs with banks. Now because of high NPAs with banks have also become very conservative. Conservative, so therefore instead the liquidity, I'm not sure, I don't agree with him, the liquidity is not very much there. That's being held back and that's being put into more comfortable pockets like the bonds, etc., government bonds. So liquidity is getting hurt. My businesses are getting hurt when I say I'm talking of IMC per se. So that there is, so this particular cut, firstly it's a good step. It's different from what the previous regime thought of, and I think that the current governor and his team are more focused on getting growth for the economy. I feel that there are various other platforms. Now you take, if I might come back to GST itself, GST is not going to bring in monies overnight. It's going to have a very turmoil period for about 18 months from 1st April. But once it settles down, it's going to bring in a lot of liquidity, white liquidity. The black money is going to get shrunk substantially. So as a result of that, that will also have an impact on cost of money. Because the biggest issue is for industry today, I'll give you a point in case. Today, let's say I'm competing against Japan, or let's say UK for that matter. Money there is LIBOR plus 100 basis points. And this is what Manish said. Whereas over here, if I'm a manufacturer and I'm competing against somebody there, I'm already out of pocket by 15%. You look at my infrastructure projects today, if interest cost is 13%, 20 years is 260%, is just interest payment. And if my margins are about 13%, 14%, my project can never be viable. So capital account convertibility, one.
But capital account is a slightly, I mean, is a stretched target, isn't
But
it?
you start working on that.
Okay.
You take for instance the scheme that SIDBI had launched, I think in 2001. It's got to do with the Credit Guarantee Trust. What does that do? That basically acts as the backbone of ensuring medium sector loans that are given by banks. So it ensures. Right. But what that does is the banks therefore are getting, their risk premium is being cut off. The cost of money can effectively come down. So there are mechanisms. Now, as he said, that with what's also happening in the real estate sector, you're getting sticky money coming in. You take REITs for that matter. There are almost, we were with Mr. Sinha the other day, UK Sinha. There have been very positive changes that SEBI has done. As a result of that, there is sticky money starting to come. In the last 75 days, almost $3 billion has come. And with the further changes that SEBI has done 10 days ago, in terms of the sponsors being increased from 3 to 5, also the 10% going to 20% on developed assets, there's going to be, I believe, in the next 3 years, in just REITs alone, you should get in about $30 billion.
Right. So there's a lot of capital coming in. So does that, I mean, let's look at both the supply and demand side. So on capital, when it comes to you as a developer, are you facing any constraints?
No, there is no constraint of capital, but the cost of capital is a concern.
Okay.
Right now, in our setup, in Indian setup, lending to real estate is generally not encouraged. Banks are not encouraged to lend, and their classification, this is loan against land, all that is not allowed. So many times the cost is high. We end up getting money from like NBFCs or from private equity that cost us a lot.
Right. Now, if you were to look at a project today, and so let's say someone who, like you, who bought land maybe 8-9 years ago and were developing it today, I'm sure your cost of acquisition was very low. But let's say if you're acquiring land today and using all these sources of capital and going back to, let's say, customers to obviously pay at current interest rates, how does that whole equation work out?
It's quite costly that way.
Okay.
If you go in that manner, suppose a person is having his own land and he has not incurred any cash for that, or it's inherited land, then it's very effective. Construction loan.
But you as a company have not inherited land.
As a company, then it's costly,
Right.
For land.
No, but is it costly or is it prohibitive? Because if you're able to sell, obviously.
I'll say not prohibitive but costly.
Okay.
Still, market is good
Yeah.
and we get the rate here.
Right. So market is good, but I mean, I have to clarify that you're playing at a premium end of the market. So would things be the same at the, let's say, the middle segment or the affordable segment?
I'm talking about middle segment of Bombay. Then
Okay.
it's applicable. Yeah.
Okay. Okay. So let me come back to you. So you talked about small and medium enterprises and that being a concern area. So cost of capital is one. What else needs to be done to ensure that there is more growth trigger or there are more growth triggers for this sector?
As I said, that's the biggest issue. And
Do
here
you feel enough attention is being paid to them?
No, there is of course enough attention, and there is a lot of effort. You see, like the Make in India program, it may seem like an event, but what's happening is today states are becoming competitive. I mean, to the extent, I'm not exaggerating, Govind, that today, as of today, there is in a particular country in Southeast Asia, a government representation that's gone from here. There's another one going from a neighboring state in the next 2 weeks, addressing the same company there, a large company to manufacture four-wheelers. Now, the issue in my mind is that they're all competing against subsidies that are to be given, to attract capital. Now, that's another issue. But people are willing to come in here. To Manish's point, where I feel that...
We're running out of time. Yeah, go ahead.
Yeah. What's important is that we need to get inexpensive monies. The platforms are there. We need to tap it. And I believe that the Reserve Bank has started. A point in case being, NPAs drive down the values of banks, etc. They started the good bank and the bad bank route now. They have started thinking about that very aggressively. What that will do is that it'll again diminish the cost of money, because once you take away the bad assets and the good assets are there, banks' valuations improve and they have the ability then to lend and borrow.
Right. Okay. Last question, Manoj. Are you expecting another cut this year?
Of course.
This calendar?
One more cut, yeah.
One more cut. Okay. Is that 25 basis points or?
25 basis point only, yes.
Okay, great. So we run out of time. Thank you both for joining me. That's all we have time for on Policy Watch this week. We'll be back next week, same time. Thanks for watching.